Hi everyone, welcome to another episode of Crypto Capsule Commentary, where today I'm going to discuss the recent news that crypto platform Celsius decided to pause all the withdrawals, swaps, and transactions from crypto clients. I'm going to explain why that happened and what are the three things that I'm watching right now. Hope you're ready, because here we go. This episode is brought to you by CoinFlex US, the first and only crypto exchange where you can trade with zero fees and earn interest with the world's first interest earning stablecoin called FlexUSD. FlexUSD pays interest on chain every 8 hours directly into the user's wallet, no staking required. Check out the link and sign up to coinflex.us to learn more. Okay, so really what I want to cover right now is what happened with Celsius last week. First of all, just for full disclosure, crypto platform Celsius was a previous sponsor of some of my educational content. And I've also had their CEO, Alex Mashinsky, on my podcast as well, an episode that you can watch both on your favorite podcast, but also on YouTube. But again, I have no inside information. Everything that I'm mentioning here is based on publicly available information, but I just want to make the full disclosure there. I think what's important to understand is that Celsius announced last Sunday night that it's going to pause all basically withdrawals, swaps, and transactions from its clients. There's been a lot of rumors of why this was the case. One of them was obviously that Celsius was heavily exposed to the Anchor protocol, and with the Luna collapse a couple of weeks ago, they actually had some losses. Others also stated that actually it has a lot of exposures to staked ETH, which is something on the Lido platform that I can discuss separately. But basically, this is something where they had a lot of exposure to as well. And also, obviously, they have a lot of wrapped Bitcoin on the Maker protocol as well. So, there's a combination of their assets are scrambled at different places where the liquidity may not be as easily available. And of course, all this happened at a time when the markets collapsed and when actually having access to your reserves and having liquidity is become critical. Long story short, basically Celsius announced that it's going to stop all the withdrawals, swaps, and transactions. It's quite important because obviously Celsius is a big player. It had over 1.7 million users that they had announced last time. At one point, it was also announced that they had over $20 billion in assets. So while it was not really a systemic player, it was a pretty large player in the crypto ecosystem. Now, regardless of what happens to Celsius, this is going to have an impact specifically on crypto yield platforms or crypto lending platforms. There's really three main things that I'm watching right now. First of all is what if this is going to act as a catalyst for the crypto lending platforms to make their proof of assets or proof of reserves, whatever you want to call it, public, or at least provide some more transparency. This is something that we saw in the stablecoin ecosystem after a couple of years. There was a lot of pressure, and finally, a lot of these players now make public every month, every quarter, and some of them on an ongoing basis, their proof of assets or their proof of reserves. Again, so this is something we saw in the stablecoin ecosystem. I don't see why we should not have this in the various lending platforms. A good example of this is the platform Nexo, where now they have on a continuous basis a kind of a proof of assets that are made public, and available for anybody to see online by an accounting firm. Second thing that I'm watching right now is what's going to happen to the peers of Celsius. Obviously, Celsius was one of the big players in the crypto yield platforms, but there was many others: Nexo, BlockFi, Ledn, HODLNOT, Yield App. Again, for full disclosure, some of them, including Yield App, are previous sponsors of my content as well. As of now, we have not really seen kind of a lot of redemption from some of these other platforms. At least none of them have been really announced. But I think it'll be interesting to watch if there's any contagion to some of these other platforms. Actually, at the contrary, what some of their competitors of Celsius have done, they've actually used this as an example of their risk management. Nexo is a good example that actually even made a letter of intent to purchase some of the assets of Celsius. Again, all of these platforms probably had different approaches to risk management, but however, what the particular approaches to risk management were are not made transparent. So again, there's a lot of opacity there. So it's definitely interesting to watch if there's kind of contagion to other lending platforms as well. And third and last thing that I'm watching is what's going to happen with regulators and policymakers. For sure, regulators will look at what's been happening the last couple of days, regardless of what happens. A good example of this is after the Luna crash, the USD crash, we had numerous policymakers and regulators come up with either announcements or new regulatory frameworks for stablecoins. I expect to see the same thing here, especially that a lot of these crypto lending platforms were already under the spotlight of various regulators around the world. Celsius, for example, was already either had received warnings or cease and desist, and was under the spotlight of a number of US states, for example, regulators. So I think I would not be surprised to see many other new regulators, make some announcements or increase the scrutiny on some of these crypto lending platforms. So these are the three things that I'm watching. Again, this is just based on the market color that I'm seeing right now. This is definitely development to watch over the next couple of days, how this is going to evolve. But one thing is for sure, regardless of what happens, you should expect to see increased spotlight from policymakers and regulators on this. And hopefully this could be positive, and we may see some positive change in the industry with regards to the transparency and disclosure such platforms make moving forward. That's it for today, guys. I hope you enjoyed this episode of Crypto Capsule Commentary. If there's any other topic that you want me to comment on or share my point of view, please let me know in the comments below. I promise I'll get to it. Thanks again for listening today, and see you guys soon.